Traders John Caruso coming to you here from October 27th for your currency outlook for the day. First, we'll take a look at some of the headline numbers we've seen out this week so far. First, we did see a reading on new home sales, which we saw a miss. Market came in at 468. The market was expecting 549. We did hear from the Dallas Fed yesterday. We saw a reading of down 12.7. The market was looking for down 6. Durable goods this morning came in down 1.2% versus an expected down 1%. That's another miss. Consumer confidence fell to 97.6 from an expected 102 reading. We've also seen very lackluster earnings reports from the mid-cap and the small-cap stocks. And last week, the highlight of the week was Draghi and the ECB talking about expanding, not expanding, but extending their QE program. And we also did see China ease as well. They cut interest rates as well. So, you know, I mean, this is just, it's a circus what we're seeing right now from central banks around the world. We did see that big stock market rally that was created from the ECB and China. And I'll tell you what, we just don't see the data right now that supports higher equity prices, and we're certainly not seeing it from the earnings reports this quarter. So we'll see where we head moving forward. We'll look at the currencies now. The dollar 97, that's up 4 points. We did see an extension in the U.S. dollar off of Draghi devaluing the euro currency, talking about expanding QE. We are running into some resistance here between 97 and 97 and a quarter. We are a little bit overbought right now. And then guess who's on deck tomorrow? We got Janet Yellen and the Federal Reserve. So what are we going to hear from them? We know that the data doesn't support raising interest rates anytime in the near future. You're most likely going to hear a dovish statement from the Fed tomorrow. So I think in the near term, the next move in the dollar is going to be back to the downside. We are at the top end of the range in the dollar. I can get you down to near 95 again here in the near term. So on the next rally in the dollar, I'd probably look at becoming bearish, barring any unforeseen hawkish statements or whatnot, any surprises coming out of the Fed tomorrow. So that being said, you also want to be careful playing the dollar the downside versus the euro, because low interest rate policy and European QE is very, very different. Okay, we know QE from past instances with the Fed is a very aggressive monetary policy stance. So you want to be careful. If you do get bearish on the U.S. dollar into rallies, you probably want to look at covering fairly quickly. But all that said, I do think the next move in the near term is going to be more downside in the U.S. dollar. Taking a look at the euro inversely, 110.45, we're down 9, holding steady until we hear from the Fed tomorrow. We are near the low end of the range in that market. I can get you down to probably about 109 on the low end. If you want to play it to the upside, you're probably going to find some solid support at 109. Once again, barring any unforeseen statements from the Fed tomorrow from the hawkish side of things. But I do think the damage has been done in the euro currency to the downside here. The majority of the damage has been done here in the near term anyways from the ECB last week. We do have a rally going on right now in the Japanese yen. The yen is a flight to safety currency at the moment. It's going to be interesting to see where that heads. But that is also approaching resistance around 83.50 as well. So if you want more trading ranges regarding all the currency markets, give me a call at the desk, 800-669-5354. We'll talk to you next week. Risk, it may not be suitable for all investors.